And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Sunday, April 9th, 2023. And I hope everybody's having a great balance of their Sunday Easter holiday. The market did not really do very much during the Globex session after Thursday and into that Friday morning reveal of the latest employment situation numbers. That data continues to show that the unemployment rate remains about 3.6%, so barely unchanged, and still likely presenting problems for the Fed moving forward. Remember, the Fed initially, or ideally, is looking for higher unemployment rates to begin to slow the inflation battle and to get the rate hikes to actually begin to kick in and perform better, I suppose, than what they have. Nonetheless, there's enough other data that's going to be coming this week, which I believe is going to have an effect. For now, though, the market did not really put in too strong of a reaction on Friday. We had a quick zip up, quick down, with the market then remaining open for about another 45 minutes after the data was released. So we finished higher. And then starting in Globex here, initially also attempted to go higher, and now is seeing the NASDAQ at least begin to slide a little bit lower. I don't think it's actually going to last. I'm not expecting any grand reversals today. So taking a review of the count, we're going to start with the NASDAQ 100. And I'm going to just open this up on a 4-hour chart, and we can see where we are and what is going on. If you remember, we've done an ABC, and the primary A was at that October low. We have the intermediate wave A, the intermediate wave B of the primary B wave, and we sit within that C wave. So we're sitting within an intermediate C wave up to complete the primary B wave. So within that intermediate C wave up, it will consist of 5 waves of minor degree. With that, we have minor 1, 2, 3, and then Friday's activity and the low, Friday's low, produced the completion point, in my estimation, of that minor 4th wave. Bringing it down to the hourly chart, what that then suggests is that we are in the beginning stages of the minor 5th wave up. Within this minor 5th wave, we'll get 5 waves of minute degree. So let's start to build our picture as to where this entire wave can end up. As we take a look at the entire move, again, going back out to that 4-hour chart, we're looking at the complete C wave, and for that, we compare the estimate for the C wave to the completed A wave. And that suggests that wave C would be 618 right here at that 13,271 level. Actually 250 to 275. We've been as high as 13,300. So again, actually, that kind of was, 13,347, 348. So again, what essentially is kind of going on is that we finished that. We did the 4. Now we're into the 5. And we're looking for where our highs can come in. Eventually, wave 5 should take out the high of wave 3, which is over here at 13,313. Next up, in terms of resistance, comes in for the entire C wave, comes in at 13,460. And then above that, I'm just going to straighten this out so I can do it all on one chart. Outside of that, we have 13,650. So we get a little bit of a jump as we start to move past these initial resistance areas, but 13,460 would be up next, and then 13,650 would be after that. Where wave C would be equal to wave A is way up here at 14,152.53. And I'm actually not looking for that unless this 5th wave really intends to extend. So I'm going to go back down to the hourly chart and take a look real quickly on what we can fill in to see where minor wave 5 might come. And so minor wave 5 is going to be related to the minor 3rd wave. And then we're going to just draw those extensions in. Oops. Get it right there. Come on. Yes. Thank you. So again, the nearest relative or the nearest comparison that we have is wave 5 would be compared to wave 3 on a Fibonacci basis. The first level that I'm going to be looking for is that wave 5 would come in at 0.618 of wave 3, and that comes in at 13,743. That number in and of itself is very common, that relationship, 0.618. That's a very common relationship between a fifth and a third wave. First up, though, we have 13,256, which we've already exceeded once, broke back down, but it still might provide a little bit of resistance on the way back up. And then we have 13,441 to 460, and that equals that 70.5% extension on the way up for the C wave. And then 382 for the fifth wave. So we get a little bit of overlap here, and that brings it into being a good candidate. Again, what we really will be looking for is what the structure itself is going to begin to shape up to be. And what we're going to do is just open that up and bring it down. When we get sideways moves, it doesn't really present us with any new evidence of what may be going on, other than that could be minute 1, minute 2, and we're in a minute 3, which we would expect it to pick up rather than continuing to slide lower as it's doing right now. So we're looking for 5 waves up. We have resistance all the way up, 13,441 to 460, 13,592, 13,650, and then we're knocking on the door, 13,740 to 750. Now, what happens if we've really seen the high and the market starts to turn lower? What would I be looking for should that be the case? First of all, confirmation within the other markets that they've also reached a high, and that's very possible. We'll be going over the S&P in just a moment. But right now, I'm kind of thinking that what it would really need to do is needs to stop, collapse, and go pretty quickly, even if we're not quite done with this fourth wave, and somehow this is all working out to be an ABC and this is an X or whatever. But I'm finding that this, in and of itself, is a pretty strong candidate to complete the wave, and that we're in the start of the next sequence higher. And that would be that wave 5. So again, I'm not looking for stronger downside from here. Should it occur, then we're likely to have to back it up and put the 5 there. And this is the start of the next stronger leg down. In fact, if we're putting a 5 there, and it would be a completion point for the C wave, the intermediate C wave, and then the primary B wave. So it would be a very strong decline from where we are. And I don't see that it would be sitting around waiting. However, having said that, what I've been talking about and continue to talk about is that when that turn comes, I believe it will be generated or assisted, or the catalyst for it will be something out of the news. It will be a shock, I believe, to the market. So something that they're definitely not expecting, or just coming out of left field. We still have plenty of things within the news cycles that could turn this market on a dime and present itself to be a very negative picture. For right now, though, in lieu of that not occurring, I'm going to be looking for this to kind of find its footing. Right now, it seems to be doing that, at least on basis of the 4-hour chart. It's sitting resting above the 4-hour 4 and the 4-hour 8. And both of those are right there at 150, and it's sitting at 13,156. So we got the support right underneath at 13,150. So, well, we're there. We're sitting on that support. If that holds, look for the market to pick up. And it should start to put a little bit more oomph in its attempt to move higher. Maybe wait until tomorrow, or at least to the Asian markets open in about 50 minutes from now. Over in the S&P, basically the same thing, except here in the S&P, on the futures market, I'm leaving the preferred count as I'm using, but actually there are 2 that really are resting on preferred status. The other I included in the SPX. Let's just go over there for just a moment to review that particular count. it is remaining on that triangle pattern. And if I pull it up to the daily, it's going to become very clear. Again, we would back up to the June lows, the June 2022 lows, to complete that primary A wave. And that's the one, labeled in the green. So what that suggests is that we have an intermediate wave A, an intermediate wave B, an intermediate wave C, an intermediate wave D. We're inside the intermediate E wave to complete the primary B wave. And it truly all fits. And the fact that the triangle pattern is still sitting forefront with potential keeps that really in place. Here are the trend lines, channel lines for that triangle. And what we have, I do have quite a bit. Let me just kind of put these down a little bit and get rid of that one. So what we have is now, again, our fibs for the E wave. And here we have this coming down. Now we're on a little bit stronger of a slope to the downside on that triangle channel line, the upper channel. If we go in from here, we're going to find that resistance now from 41.47 to 41.60. Now, what I can add into all of this is, what about that small little fifth wave of the C wave up, right? So we got an A to B, now we're in a C wave up, and it should be 5 waves. So I'm going to use the same and put in Fibonacci extensions. Will cover us up to here, bringing it back down to this low, and let's see what we get from there. So what we have is, right away, we have a 50% level, which is doubling up with an additional 50% level at 41.60. So we have 3 or 2 at 41.40, we'll call it. Then we have the channel line at 41.48 to 50, and then we have a 50% fib level at 41.60. So lines up, or if it gets a strong enough little push, 41.80. But if it gets and goes that cleanly through the channel line, then it's going to raise a little bit different of a story. And again, in the SPX, we're looking for that to maybe just top out. Now, again, remember, in a triangle pattern, what the resolution is going to be is that the market thrusts out of the triangle, but not into the upward fashion, because we'd be looking for it to happen to the downside, and that's going to come on the basis of how we're counting this. A, B, C, D, E. So the thrust would be lower, and the initial move out of the triangle is that it thrusts out the width of the triangle. And that would suggest that it's going to come down and get below 38.50, 38.60, 38.50 as its initial move out of the triangle. But that would be what I would expect if indeed we're in this triangle pattern and it gets up there and it finishes the E wave. It should be a quick drop, boom. So that's why I'm relating and suggesting that with the NASDAQ, which is not in a triangle pattern, if it kind of goes up but it fails, and we have to switch a couple of the levels and within the count to show that the market is likely completed along with the NASDAQ, then what we're looking at is, again, a situation where the market should move swiftly lower, just break and go type of a move. And again, I'm looking at that likely being associated with some type of a news story that comes as a shock to the market. In the meantime, we're going to continue to have upside resistance. And again, if I kind of go back over to the S&P, where I have labeled the other alternate or 2 preferred counts, both carrying pretty strong potential for being the one that's in force. But you'll see that they basically kind of come up with the same plan, so to speak. In this preferred count number 2 or preferred count number 1, the primary A is at the October lows. With that in mind, then we have an ABC up for wave A, intermediate wave A of primary wave B, intermediate wave B of primary wave B, and now we're in the intermediate C wave. That intermediate C, excuse me, that intermediate C wave will unfold in 5 waves of minor degree. Breaking back down to the hourly chart, we have minor 1, 2, 3, and 4. 4 would be Friday's lows. So that would be the wave 4. And now we're coming up, and it could be 1, 2, 3, or 1 and 2, and 1 of 3, et cetera, et cetera. Again, to open that up to show just a little bit, we're in a period where the markets are really not doing much. And this would have been Thursday's Globex session, excuse me, into that number that we received on Friday. And then basically the S&P reacted much better than the NASDAQ did, as a matter of fact. But now we're seeing a little bit of a downturn, nothing more than maybe just a small corrective move. So I'm not really looking for strong downside from here before at least we get up to either complete the triangle or we continue to move higher in a 5th wave, a minor 5th wave, to complete that intermediate C wave. And again, same story. I'd be looking for the market to peak and to slide. But within the triangle, we're not really going too far above that upward boundary. Now, this is in the futures market. We're looking at 4180. So again, 4150, 4160, that puts us right into, if we're considering there should be a little bit less interest involved in the futures market versus the cash. So if we're looking here, if we're going to use 30, this would be 4175, would be about 4145 in the cash market. We're coming up here, 4180 is going to be 4150 in the cash market. So the cash market closed at 4105. So we'd still have a little bit of a rally to put in before we'd expect that larger turn. So we got some room there, and we're going to have to pay close attention just to see how the market is and what it does as it gets up there. So again, here, I'm going to just open this back, kind of put it into that level. Here we have for the wave 5, already put in. So again, I'm going to open it up, bring it down so we can take a look. And what we have up first, 4151, not looking like that's going to be anything more than just maybe a pause. If we get this rally going, it's just going to be a small pause, and then we continue to push. Then we have 4175, and we have the upper band for the upper channel line for the triangle pattern, and that's at 4180. Then we have 4186. Then we break. We have a little bit of a break in between there, up to 4213, and then again, if it breaks that, get a little bit more of a black hole, but just, not any real strong resistance, and we're back up towards 4142. Now, that would be where wave 5 would be 618 of wave 3. Again, a very common area for a 5th wave to complete. So ultimately, though, we have to continue to look at the potential. Technically, the market does have numbers all the way up. We have 4254, 62, 4281, 4313, and 4331, where wave 5 would be equal in length to wave 3. Not looking for that doesn't mean it won't happen. We have to consider and keep those in mind if the market does a turn from within these levels to the upside. If it starts to show strength, remember the market's perception is earnings are always going to blow the doors off. They're always going to be good earnings, and so we're just going to start buying. And that is what's going on. We're entering into the earnings season and starting with the banks. So they're going to go back and look at what did it do last quarter. How did they report last quarter? They all did pretty well. Are we expecting them to do it the same? Obviously, the market seems to deem that it should. Doesn't mean that it's going to. So again, in terms of economic numbers, we do have some larger ones coming out this week. Tomorrow itself, we only have wholesale inventories, and those come out at 10 a.m. Eastern. But on Tuesday, we have nothing on Tuesday the 11th. So the big days start on Wednesday. But let me just say, on Tuesday, we have the Chicago Fed president speaking, we have the Philly Fed president speaking, and we have the Minneapolis Fed president speaking. So we have Kashkari, Harker, and Goolsbee all talking tomorrow at various times. Excuse me. Chicago Fed, Goolsbee, he speaks first, and that starts at 1:30 p.m. Eastern. And then after the market close, we get Harker speaking at 6:30 and Kashkari speaking at 7:30, all Eastern time. Now on Wednesday, 8:30 a.m. Eastern Standard or Eastern Daylight, we have consumer price. And then we also have starting at 9 a.m., the Richmond Fed President Barkin speaking, and also San Francisco's President Daly comes out and speaks. And those 9 a.m. and then 12 noon are all on tap. We have the Treasury budget, which will be released at 2 p.m. And then also at 2 p.m., which can, for whatever reason, turn into market movers. We have the minutes of the last FOMC meeting. Now on Thursday, we have at 8:30 producer price. So that we're back to that schedule where CPI and PPI come out in the same week. So, and then also on Thursday, we have the continuing or the initial jobless claims for the week. And that comes out on Friday. U.S. retail sales, industrial production, capacity utilization, business inventories, and consumer sentiment all come out on Friday. So we kind of have a busy week in terms of economic data, and the market's going to hang its hat on that. And then also don't forget that on Friday, we start, and others will come out before, but that's when some of the major banks will be reporting their earnings or starting. For example, we have JP Morgan. Also on the 14th, we have Goldman Sachs. On the 18th, we have Citigroup. On the 28th, on the 14th. So we have Citigroup and JP Morgan on the 14th, Goldman Sachs on the 18th, and Bank of America is usually up in there at some place. And I took them off my charts. I would put them back. But the banks begin to report. And then we'll also begin to see others start to flow in. And we'll see how that all develops. Out of our bigger players, we won't see Apple until the beginning of May. We have Amazon reporting on the 27th of April. Google report on the 25th of April. We have Meta reporting on the 26th of April. Microsoft reporting on the 25th. So we have to wait 2.5 more weeks before we start to see the tech sector put in the reports. It's a lot of time to be hanging out up here on a hope and women and prayer. So again, we'll see what happens. We'll see what the market does. We'll see what happens when we get up into resistance that should be completing the move. And it may come prior to us getting any of this data from the earnings reports. So I'm going to leave it right there in terms of the futures markets. And I'll just take a quick look because I apologize for the lack of that big picture update. I do have a podcast that Dan Ascani and I did on yesterday, but I'm having it prepared and it should be published a little bit later tonight. But again, going over to the bonds. Now, the bond market continues to present a very interesting story because the volatility as measured by the volatility index that they're used in the bonds is very, very strong right now. It's very high right now. And as one analyst discussed, it's like the bonds are hyperventilating. So if you've ever been around somebody who hyperventilates because they're just nervous or overexcited, there's just, a little bit of panic going on. You get that, they can't breathe. And what do? You give them a paper bag so that they're just kind of breathing carbon dioxide to stop the oxygen from, crippling or producing the cramps. So what happens when people hyperventilate? Well, the bond market seems to be hyperventilating a little bit. And usually it's because there's a lot of kind of uncertainty. A lot of uncertainty in what interest rates really should be doing right now. Should we continue for bond prices to go up in terms of what this little correction, and it's a counter trend move that started off at the October lows. So again, we're continuing to work against October lows in the interest rate market and treasuries and also in the equities. and we're quickly reaching, I believe, our top levels. So while that is in process, we're seeing a lot of volatility here in the 30-year bond, also in the 2-year note, the 5-year note, and the 10-year note. So all of the interest rate markets that we're following are exhibiting pretty high volatility. So in the 30-year bond, it's still looking pretty much on schedule that it's going to get ready to move up. I have some resistance lines drawn here. It's got to get itself, first of all, cleanly back above the 133 level, which it's been holding. I need to get above 133.10, start to move up again, get past the 50s. This is on the 1-hour chart, and begin to move up towards 134, then 134.19, 34.26, 35.13, and then we should find some resistance to complete this fifth wave and the minute third wave somewhere around 135.27 to 31. But I'm going to even consider it 135.13. But I would think that we can get this move going. We'd get some decent rallies like we saw last week at different periods. Get it up moving, get it back above 134.26 and up towards 135. Complete this minute 3, pull back again, run up one more time, and so that would be minute 4. Right, so we finish a 3, do a 4, and do a 5, and get ourselves up into these levels to complete the ABC up, set the stage for the interest rates to begin to rise again while the bond prices drop. I'm going to leave it right there for the market. For Treasury markets. Gold continues to present a very interesting picture as well. I'm going to reserve that and go over that tomorrow with our regular update for the S&P and the NASDAQ. And on that note, I'm going to finish up here for tonight, and our next update will be on Monday, April the 10th.